Hello listeners and viewers. Welcome to Kaduna State Ministry of Education Radio and TV e-learning program designed for our SS3 and other students staying at home due to the coronavirus pandemic. The present administration, under the able leadership of His Excellency, Malam Nasir Ahmed El-Rufai, is positioned as always to ensure that under his leadership, our students are not left behind in all areas of human endeavors, especially education. Kaduna State is the center of learning. Therefore, we want to ensure that our students excel in their forthcoming examinations and beyond. Students and other learners at home are given this opportunity in order to continue learning, as education is a continuous process. Different subjects will be taught in this program to assist students to perform excellently in the forthcoming Senior School Certificate examination being conducted by NECO and WAEC as soon as schools reopen. Teachers making presentations will always provide their names and phone numbers during each presentation, and they can be contacted for questions, further explanations, and/or clarifications. The following numbers and contacts can also be reached for expression of any concern or observation: 090-865-00545 or 080-383-62072. Our website is www.education.kdsg.gov.ng. Our email education@kdsg.gov.ng or education.kdsg@gmail.com. Our YouTube channel, Ministry of Education, Kaduna State. Our Twitter handle @Kaduna_MOE. Or our Facebook page, Ministry of Education, Kaduna State. Stay safe, stay at home, and learn well. Thank you, happy listening, and happy viewing.
Good day, students. I'm happy to meet you once again. I am Borel Joseph Yayok. Today we shall be treating preparation of non-profit making organization accounts. In our previous lesson, we defined a non-profit making organization as organizations that are interested in the welfare of their members. They are not there to make profit, but to see to the welfare of their members. We talk about the accounts they prepare. We say they prepare 3 accounts. They prepare the receipts and payments account, income and expenditure account, and a balance sheet. We talk about the sources of income to non-profit making organizations, then their features. Today we shall be treating the practical aspect of non-profit making organization account. That is, we are going to prepare a receipt and payments account, we are going to prepare income and expenditure account, and a balance sheet. We said the receipt and payments account is being prepared just like the cash book, while income and expenditure account is being prepared in form of a profit and loss account. Now, in the receipts and payments account, at the end, we determine the cash at hand or cash at bank. Then, in the income and expenditure, we don't calculate net profit, but we calculate net surplus, that is, excess of income over expenditure. Now, we have this question to tackle. Below is the summary of a city sport club for the year ended 31st December 2017. Balance as at 1st January 2017 was 24,155. Entrance fees, we have 2,500. Subscription receipts, 1,500. Donation, 2,100. Proceed from dance, 18,075 naira. Interest received on bank deposit, 6,000 naira. Wages pay, 3,615 naira. Stationery bought, 4,895 naira. Equipment bought, 20,000 naira. Repairs, 500 naira. General expenses, 4,448 naira. Rates, 500 naira. You are required to prepare the receipts and payments account, income and expenditures account for the year ended 31st December 2017, and the balance sheet as at 31st December 2017. Additional information. My student, whenever you are given a question and there is an additional information, have it at the back of your mind that some of the items have some adjustment. Now, the additional information here are as follows. One, the subscription received 400 naira was in arrears the previous year, 2016, while 1,000 naira pay in advance for the coming year, 2018. In addition, 600 naira was still owing as 31st December 2017. 2. Rates prepay amounted to 100 naira. 3. General expenses included 1,500 owing since the previous year. Wages of 2,400 were due and on pay as at 31st December 2017. Clubhouse has the following property as at 1st January 2017. The clubhouse, 14,800. Equipment, 30,000. Bank deposit, 20,000. Number 6, depreciation clubhouse by 5%, and equipment by 10%. Now, workings. We have to make some adjustment due to the additional information. So, our subscription received is 1,500, the figure given in the balances. Then we have arrears of 400 naira and arrears of 600 naira. When you sum up this amount, you arrive at 2,500. Then we deduct the prepayment, that is payment in advance, which was given as 1,000 naira, in order to arrive at the actual figure we are going to use. So when you deduct 1,000 from 2,500, your answer will be 1,500 naira. For wages, we were given 3,615, and there was arrears of 2,400. So the total will give us 6,015 naira. This is the figure you are going to use in your receipts and payments account. For rates, the rate was given as 500, and there was payment in advance, that is payment for 2018, and this account is for 2017. For that, we are going to deduct the figure for 2018. So when you deduct 100 from 500, you arrive at 400 naira. So 400 naira is the figure that we are going to use in this account. While general expenses, which was given as 4,418, and there was accrual, which is 1,500, that is owing. When you add this figure, you arrive at 5,948. Then we were told that the asset will be depreciated. So the clubhouse was to be depreciated by 5%. So 5% of 48,000 naira is equals to 5 all over 100 times 48,000 naira all over 1. So the 5% now will give us 2,400. For equipment, we are to charge 10% of the figure. Remember, we were given the equipment figure as 30,000, and in our items, that is the balances, we were told that equipment was bought worth 20,000 naira. So to get the actual figure for equipment, we are going to add 30,000 plus 20,000, and we are going to arrive at 50,000 naira. Now, 10% of 50,000 naira will give us 5,000 naira. Now, to prepare the receipts and payments account, the first thing is we write the name of the organization, which is City Sport. Now we have receipt and payment account for the year ended 31st December 2017. That is the title of the account that we are going to prepare. So the receipt and payment account is also in a T form. On the right hand side, it is the credit side. The left hand side is the debit side. Now, the receipt and payment account follow the rules of cash book, the way you prepare your cash book. Now, all the receipts collected will be on the debit side, and all the payments made will be on the credit side. Now, starting with our debit side, we have balance brought forward with 24,155. Entrance fee. Entrance fee is a receipt, money that comes into the business, 2,500. Then proceed from dance, which is also a source of revenue, 18,075 naira. Donation, 2,100. Subscription received, 1,500. Interest in bank deposit, 6,000 naira. Then when you sum up all the items on the debit side, your figure will be 54,330 naira. Now, the credit side of the receipt and payments account, that is the payments you make. So whenever you make payments, there is deduction, a decrease in your asset. Now, wages pay is 6,015 naira. Then we have stationery, 4,895. Equipment bought, 20,000 naira. Repairs, 500 naira. General expenses, 5,948. Rate, 400 naira. Now, when you calculate, you sum up all the payments you make, you see that the figure will be less than the receipts. That is, the money that you collect that comes into the business is greater than the payment you make, that the money that goes out of the business. So you now find the difference. Now the difference between the debit side and the credit side is 16,572 naira. And this difference would be on the credit side of the payments. Now, when you sum up all, you also have the total of 54,330 naira. Now, this balance carried down, which is on the credit side, the corresponding balance brought forward will be on the debit side of the receipt and payment. And this is the total money you have at hand, or the total money you have in the bank. That is how we prepare the receipts and payments account. Now the income and expenditure account for the year ended 31st December. Just like I said, the income and expenditure account is being prepared the same way we prepare the profit and loss account. Now, when dealing with the profit and loss account, all expenses are on the debit side, while all income are on the credit side of the account. Now, going to the debit side of your account, we have wages, 6,015 naira. General expenses, we have 5,948 naira. Equipment bought, 20,000 naira. Repairs, 500 naira. Stationaries, 4,895 naira. Rates, 400 naira. Depreciation, all this one will be on the second column of the naira sign. Now we have depreciation. We are told that The clubhouse was to depreciate by 5% and equipment 10%. So for depreciation, clubhouse is 2,400, equipment is 5,000, and this figure will appear on the first columns on the first naira sign. When you sum up 2,400 and 5,000, you arrive at 7,400 naira. Now, on the credit side, that is your income, we have balance brought forward, 24,155 naira. Entrance fee, 2,500. Subscription receipt, 1,500. Donation, 2,100. Proceeds from dance, 18,075 naira. Interest on bank deposit, 6,000 naira. So when you sum up all this, you arrive at 54,330 naira. Now this is the total income you have. Now for your expenditure, when you sum up 6,015 naira, 5,948 naira, 20,000, the 500 naira, 4,895 naira, 400 naira, and 7,400 naira. The figure will not be the same. That means your income figure is greater than your expenditure. So you now find a difference. Now, when you find a difference, the difference will give you 9,172 naira. And this difference, we call it net surplus. Now, this net surplus represents net profit in the profit and loss account. So this figure will be inserted on the debit side of the income and expenditure. So when you sum everything, you find out that the two sides have equal figure. On the debit side, you have 54,330 naira. On the credit side, you also have 54,330 naira. So the corresponding balance brought forward will be on the credit side of the income and expenditure. Just like we said, all income have credit balance. So this surplus is what? Is the money you have at hand. So we don't call it net profit, but we call it surplus. And surplus, we say, is what? Excess of income over expenditure. So that is the end of the income and expenditure account. Now, we were told to prepare a balance sheet. And in the balance sheet, a figure is missing. That is, whenever you are asked to prepare a balance sheet and the capital is not given, that is, when you are preparing a sole trader balance sheet or a partnership balance sheet, and the figure capital is not given, you have to prepare what we call statement of affairs. And this statement of affairs is an account prepared in order to determine the capital of a sole trader or the capital of a partnership organization. But we're dealing with income and expenditure, that is a non-profit making organization. So they don't use capital, but we use accumulated fund. This accumulated fund represents capital in the sole trader account balance sheet and that of a partnership. So to prepare this, normally the difference, to prepare the statement of affairs, we find the difference between the total assets and the liabilities. Now the total assets here on the right hand side of the statement of affairs, we have all the assets. We use the assets to know the figure. We have fixed asset, clubhouse 48,000 naira, equipment 30,000 naira. When you sum up this figure, you arrive at 78,000 naira. Then we have current asset, subscription. We have 400 naira, bank 20,000 naira, cash 24,150. When you sum up this figure together, you arrive at 44,555. So when you add 44,555 and 78,000 naira, you arrive at 122,555 naira. That is the sum total of the assets. Now, we say to prepare the statement of affairs, we find the difference between the assets and liabilities. Now, the liabilities we have here is general expenses in arrears, and the figure there is 1,500. So the difference between 122,555 naira and 1,500 will give us the accumulated fund, which we arrive at 121,055 naira. So we have succeeded in getting the accumulated fund. So our accumulated fund now is 121,055 naira. Now we can go on to prepare our balance sheet. Now remember, the title must be there and the year. So the balance sheet will be prepared as follows. Balance sheet as at 31st December 2017. Now we'll start on the credit side of the balance sheet. On the credit side, we have the fixed asset and the current asset. And I told you that in our previous balance sheet, I told you that the items in the balance sheet are being prepared based on their lifespan. Now, the first asset that will appear there is the clubhouse. The clubhouse, that is a house, would last longer than equipment. And I told you that whenever you are preparing a balance sheet, you should have 2 naira columns. Now, where you have provision for depreciation, you will write the figure on the first naira sign column. Now, the first asset there is clubhouse, and the figure is 48,000 naira. This figure will be written under the first column of the naira sign. Why? There is an adjustment. There is a depreciation figure. So we use the net book value. Now, the depreciation figure there is 2,400. Now, when you deduct 2,400 from 48,000 naira, your figure will be 55,600, and this will be written on the second naira column. Then we have equipment, 50,000 naira, which will be on the first naira column. Less your depreciation, 5,000 naira. When you less it, you arrive at 45,000, and that figure will be on the second column of the naira sign. When you sum up 45,600 and 45,000 naira, the total figure for fixed asset is 90,600. Now you have your current asset. Subscription in arrears is 1,000 naira. Rates prepay 100 naira. Bank deposit 20,000 naira. Cash 24,155. Now when you sum up the current asset, your figure will be 45,255 naira. Now you add the figure of fixed asset and that of current asset. You will arrive at, that is 90,600 and 45,255. Your figure will be 135,858 naira. Now on the debit side, you have accumulated fund, which will be the first item to appear, which is 121,055 naira. Add your net surplus, 9,172 naira. When you add this figure, you arrive at 130,275.27 naira. Then current liabilities, subscription prepay 1,000, wages accrue 2,400, general expenses 1,500. When you sum up this figure, you arrive at 900 and 1,000. You arrive at 4,900. Now you add your 130,227 with 4,900, you find out that the figure would not rhyme. So you find the difference. Now the difference here is 731 naira, and this figure will be taken to suspense account, and we add this 731,000. Now when you sum up the current liabilities and the figure of accumulated fund and surplus, you will find out that the two sides did not agree. So we find this difference. The difference is 731. This figure will be taken to suspense account. You now write suspense account. Then when you add this, your account will balance. The two sides will balance. Remember in our previous lesson, I told you a suspense account is an account prepared in order to determine the difference in a trial balance and in a balance sheet, pending when this error will be detected. So at the end, we have succeeded in preparing the balance sheet. In summary, the item, when you compare your receipt and payment account and the income and expenditure account, you will find out that the items that appear on the debit side of the receipt and payment account are recorded on the credit side of the income and expenditures account, and vice versa. The statement of affairs is being prepared to ascertain the accumulated fund or capital in a sole trader balance and that of a partnership. Assignment. When you go to your essential financial accounting for senior secondary school by R.A. Ibrahim and R.A. Kazim, I want you to tackle this exercise 24.2, pages 387 to 388. I said the exercise 24.2, pages 387 to 388 in your essential financial accounting for senior secondary school by R.A. Ibrahim and R.A. Kazim. I still remain Mrs. Morel Joseph Yayok. You can still Morel Joseph Yayok 08073868421. Morel Joseph Yayok 08073868421. Stay home, stay safe, keep learning. God bless you.